Hello traders, welcome to your Follow the Bots S&P 500 Daily Market Recap, sponsored by Zaner. Since 1980, Zaner has been helping futures, commodity, and forex traders trade smarter, faster, and easier.
Hello traders, Bill Duryea here with Follow the Bots. Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Thursday, September 19th, 2013. S&P futures broke out above its prior multi-year high and auctioned up to a new high at or near 1730. The rally that began yesterday continued modestly today during the overnight session. However, the market did not sustain its upward direction. Buying interest waned at the high. Selling pressure entered the order flow, and the S&P pulled back and ended the session modestly below the prior day's close. The market has been in a major up move since auctioning down to test support at or near 1625 at the end of August and the beginning of September. Price has traded through the minor supply levels that developed when the market pulled back to retest support. It's auctioned back up into the upper trade cluster, has retested the prior multi-year high and gone on to make a higher high. When the S&P auctioned up off of its recent low during yesterday's session, what we are now referring to as the FOMC low, down at or near 1692, the market rallied exponentially above the prior high, trading up to 1713, 1712 in its initial up move. This up move occurred within less than 1 minute. Following the initial up move, selling pressure entered the market and price pulled back modestly to the prior multi-year high at or near 1705, 1706. Buying interest immediately surfaced. There was demand sufficient in quantity to halt the S&P from trading lower and resulted in the market auctioning back and making a higher high and trading up initially to 1717, 1716 before modestly pulling back again to 1712, 1713. The S&P went on to auction up to its initial day session high at 1723 and overnight went on to make a higher high, trading up at or near 1727. Following the overnight rally, buying interest waned at the high, selling pressure overwhelmed demand, and price auctioned back down into the trading range, stopping at or near the prior day's close, but continued to sell off throughout the day, ultimately pulling back down to the initial pullback target at or near 1713, 1712. The pullback was met with a buy response, buying interest entered, and price auctioned back up at or near the prior day's close at 1718, 1717. For a detailed look at today's market development, we'll turn our analysis to the 5-tick range chart. Here we see the overnight high up at or near 1727. Price had pulled back below the overnight high prior to the open and traded back up to 1723, which was the previous day's high, and the computerized trading programs ceased to execute to the buy side, buy programs waning occurred, and the S&P initially auctioned down to the previous day's close at 1717, 1718. The selling programs then ended. The computerized trading program ceased to execute sell-side orders. The digital filters turned up, and price auctioned back at or near the opening range high, but failed to continue back to the overnight high. When price returned to retest the opening range high, buying interest once again waned, and the market just kind of meandered slowly lower. There was definitely high frequency selling on the upticks, but the trading range remained relatively narrow. There was no real big strong directional run. The market wound up slowly pulling down to 1713, at which point the computerized trading program ceased to execute to the sell side. Sell programs waning occurred. Price action consolidated, the averages slowly turned up, and high frequency buying accompanied the auction as price traded back up to 1718. Coming into tomorrow's session, there is minor supply located up here at or near 1720. That's the first obstacle, the minor supply at 1720 that price encounters as it auctions up off the low. Support at or near the 1712s is still a key support level. However, the better support is located down at 1706, the prior multi-year high. In the event the market encounters resistance when it auctions up to 1720 and fails to find buying interest sufficient in quantity to overwhelm the supply imbalance here, and the market stalls, pauses, and then eventually pulls back down to 1712 or 1713, there is the potential for price to breach support and trade down to the breakout point at 1705, where the market transitioned into the new developing trading range. Currently, the stopping point is located up at the overnight high, and range extension, the maximum likelihood range extension target, is located up at 1735. A breakout above the current high has the potential for the market to auction up and extend the range up to at or near 1735. We would expect to see the market retest the high and potentially extend the trading range. Stops are now located 2 points above the prior high, approximately up at 1730. If support is breached at the minor pullback target level, 1712, and price sells off and pulls back to the breakout point, we would expect to see a buy response occur and result in price auctioning back up to the midpoint of the trading range at or near 1718, 1720. Once again, there will be an obstacle in the form of overhead supply that the buying interest will have to overcome, and or the sellers will have to capitulate, acknowledging the low is likely in, cover their short positions in order for the market to auction back up and retest the newly made high. In the event that price sold off and pulled back to 1706, we would still expect to see a positive outcome, i.e. a retest of the high. In other words, a retest of the current high and the possibility of range extension and a higher high. That concludes our daily recap for the S&P 500 on this Thursday, September 19th. If you would like to follow our real-time commentary, we invite you to visit us on the web at www.followthebots.com. Log on and join us some morning at the open.
For more information regarding Zahner's brokerage services or the content of this broadcast, contact Neil Rogers, nrogers@zahner.com, 312-277-0135. This is Cuerva from Follow the Bots. Happy trading.